we might have found the ultimate cheat code to wealth this cycle. And no, it's not about buying meme coins, although that's fun too. We like meme coin gambling. But there is a glitch in the system turning Bitcoin treasury companies into absolute monster compounding machines. Companies like Metaplanet and Strategy, they claim that they have cracked the secret of basically infinite money and infinite Bitcoin. Well, there's not infinite Bitcoin, you know what I mean? And if they're right, this could mint a whole new wave of millionaires. The new altcoins apparently are stocks, crypto treasury companies. So stick around because we're about to explore how this Bitcoin money glitch could supercharge your portfolio. Right now, the crypto game is changing and not enough people are talking about it. Well, everyone is busy chasing the next hot meme coin, mega gambling on Pump Fund or wherever else you guys decide to throw your money down the toilet, paying all of this interest rates. Oh, the tariffs, man. Companies are scrambling to hijack Michael Saylor's playbook and create gargantuan wealth for shareholders, morphing into Bitcoin treasury juggernauts faster than you can say to the moon. And it's not just talk. Since MicroStrategy started buying Bitcoin in 2020, its stock has exploded by over 3,000%. More recently, Japanese-based Metaplanet saw its shares surge 2,400%. These are altcoin-like returns, by the way, okay? After announcing, of course, its own Bitcoin strategy back in 2024. Now, these aren't just pumps. They're blueprints for extreme wealth creation. But before we dive into the money glitch, let me ask you a question. What are the drawbacks of simply holding Bitcoin? You might say, well, come on, Lark, Bitcoin's perfect. There's no drawbacks. You know, I'd almost agree, but there are some issues, whether they're issues for you or not, a different conversation, but there are issues. First off, Bitcoin doesn't pay you anything. No dividends, no passive income. You just sit there and wait for the number to go up, which is fine. The number goes up pretty consistently. Sure, it's a great long-term asset, but while you're holding, you're not earning anything. And the only way to earn anything, what you're holding, is to sell it, but you don't want to sell your Bitcoin, right? Then there's the tax nightmare. Depending on where you live, selling Bitcoin could trigger gargantuan capital gains bills. In Japan, for example, some people pay as much as 55% in taxes on their BTC profits. There has been talk in Japan of lowering the crypto taxes, and a bill may have even been introduced recently to do that. But anyway, it's crazy, nevertheless. Let's not forget about the custody risk. Self-custody is powerful, but it comes with great power comes great responsibility. Seriously, if you lose your private keys, you're fucked. Your money's gone. No support hotline, no recovery process, just goodbye, money, goodbye. So holding Bitcoin is a solid long-term play. It's not exactly frictionless and definitely not optimized for cash flow or for compounding. Now, before we break this down a little bit further, guys, I just want to let you know, if you're looking for an awesome community of like-minded investors and traders, check out our Discord. It's awesome. There's a link right down below here. We're constantly sharing all kinds of setups. So trade setups, meme coin plays. We've been right at the forefront of the treasury portfolio stuff. We're giving real-time feedback from me and my team. It's a pretty awesome spot. You should go check it out. There's a link right down below here. Self-promotion over. Go check it out. Link down here. So anyway, these Bitcoin treasury companies are changing the game. Picture this. Traditional debt-laden businesses, once making money the old way. They are ditching their legacy ops and pivoting full send into Bitcoin. One of them, of course, is Metaplanet. It's a great example. This was once a struggling hotel chain on the verge of collapse. And then from the darkness appeared Bitcoin, and their stock pumped like crazy. They pulled a dramatic pivot, going full-on Bitcoin, rebirthing themselves into a publicly traded Bitcoin vault on the Tokyo Stock Exchange. They are the MicroStrategy of Japan. In a recent interview with David Lin, Metaplanet's big boss, Simon Garovich, he dropped some pretty awesome alpha on the Bitcoin treasury idea. He laid out exactly how Bitcoin treasury companies can create wealth, not just through price appreciation, but by compounding their Bitcoin per share over time. Pretty cool idea, right? Kind of like stacking Bitcoin, but on steroids. And they're not doing this by trading or farming yield or minting tokens. Nope, they're just stacking more and more Bitcoin, which is smart. It's relentless, it's strategic, but here's where it gets really wild. You see, holding Bitcoin obviously is fantastic, but owning shares in a Bitcoin treasury company could be even better. Now, they do not all come the same. There are different companies in different countries that have different ways to raise money. But still, why is this the case? Because it's something called Bitcoin per share. So let's break it down. When you buy shares in a company like Metaplanet, you're not just betting on Bitcoin's price, you're also getting a slice of all the Bitcoin that they hold. As the company buys more Bitcoin and keeps the share count low, your Bitcoin per share goes up, even if you never buy more shares, right? Now, add Bitcoin price growth on top of that, it's a double whammy. And when these companies raise money to buy even more BTC without dumping what they already have, you get a flywheel effect, baby. More capital, more BTC, higher BTC per share, more people buy, and it just keeps going up. Think of it like this. Let's say you own one share in a company that holds one Bitcoin split across 100 different shares. Okay, you effectively own 0.01 BTC. Now, imagine that same company raises money and buys another Bitcoin, but doesn't issue out more shares. Now, sometimes they do issue more shares. You have to be aware of that. Okay, just FYI. But anyway, just say they don't issue more shares in this example. Suddenly, your same one share is now backed by 0.02 BTC. That increases your slice of the pie of Bitcoin. That's what we call Bitcoin per share yield, and it's how your exposure compounds over time, even if you never buy more shares. Then if Bitcoin doubles in price, guess what? Your share just rode two waves at once. There's more BTC per share and a higher price of BTC. This is the Bitcoin money glitch. And it's like holding Bitcoin, but with compounding built in. And obviously there's risks. These companies can rehypothesize and commit fraud and all kinds of bullshit. There are different risk factors when compared to just holding Bitcoin. But let's take another example. France's blockchain group releasing a firm that holds over 1,900 BTC. And get this, his Bitcoin per share yield is up 1,368% year to date. That's not just a pump. It's what compounding Bitcoin exposure looks like in the real world. But wait. Don't we have ETFs for that? Sure, spot Bitcoin ETFs are an absolute game changer. It's insane what they've done. The amount of liquidity they brought in is bonkers. They give people easy access to Bitcoin through their brokerage accounts. But here's the key difference. ETFs are just holding straight Bitcoin. They don't compound. They can't do any funny stuff in the background to increase the Bitcoin per share. You're exposed to BTC price. You have claim on the BTC that your paper shares represent, okay, but you only make money if the price goes up. Now compare that to companies like Metaplanet or Strategy. These guys aren't just parking BTC, they're running a whole just mill of strategies to increase your slice of the pie over time. And if they raise money the smart way, like selling shares at a premium, okay, instead of selling their BTC, then it's a win-win for both the company and the shareholders. And that is why companies like Metaplanet are doing so well. Now, Metaplanet CEO Simon Garovich calls it a Bitcoin per share growth engine, aka infinite money glitch. And to be clear, this is not just a Bitcoin game anymore, okay? We have SharpLink Gaming backed by Joe Lubin, early investor in Ethereum, founder of Ethereum Development Studio Consensus. He wants to make SharpLink Gaming into the MicroStrategy of ETH. BitMine, backed by Wall Street legend Tom Lee, also going for the same strategy. It's not just Ethereum. Companies like Upexi are doing it with Solana. There are XRP treasury companies launching as well, with more exotic altcoins like Hyperliquid also coming into play. The treasury company game is only growing bigger, and it's going to suck in billions and billions of dollars worth of altcoins as well, not just Bitcoin. By the way, I do own some treasury companies. Right now, I've got SharpLink Gaming and I have BitMine, betting on ETH treasury companies to be undervalued relative to Bitcoin treasury companies. They're not recommendations, by the way. They're just disclosures. Please do your own research, okay? Now, before you go crazy and sell the house or the dog, or worse, sell your Bitcoin, you have to understand everything has a weakness. And I think that this is the toxic liquidity of this cycle. These companies raising money, issuing shares, whatever, to buy more assets, great. And a few of them are going to do extremely well. But there's going to be a lot of bullshit, okay? And yes, these companies can outperform Bitcoin. They can also crash much harder. If Bitcoin dumps 50%, a treasury company that's overleveraged or mismanaged could face margin calls, forced selling, or we could have insolvencies as rehypothecation or fraud get exposed in those situations. And be careful because, of course, not all treasury companies are created equal. MicroStrategy, of course, is the gold standard. It's also the biggest one. It is the Bitcoin of treasury companies, if you will. But Some companies are over diluting their shares. They're taking on too much debt to get more Bitcoin. And you can just think, what's a 50% drawdown do to them? And there's so many of them. And a lot of them are going to be fly-by-night operations. The big deals are MicroStrategy and Nakamoto and 21. These are backed by serious damn players in the Bitcoin game, okay? But some of these smaller guys are going to get liquidated. They're going to sell their BTC at the bottom. They're going to file for bankruptcy. It's going to be Celsius and FTX all over again. But this time, it's not just crypto. These are publicly traded companies. And if they collapse, they could drag the entire market sector down with them. In fact, when the prices start going down, I suspect that this will be the toxic liquidity that breaks us in the bear market. Great on the way up. Bring all the money in. When things start going bad, when the water goes out, we're going to find out who's swimming naked, okay? Just like with meme coins, you've got to choose your horse wisely. The good news, publicly traded companies are at least regulated. They do have to disclose their financial decisions. So you have a lot more certainty with this compared to a lot of the shit you might throw your money into in crypto. So do your homework. There's some real gems out there. Personally, I think throwing in some cash here instead of gambling on meme coins might actually be a smart play. I've got exposure, not saying you have to or should, but perhaps it's something we'll do some more research into. And let me be clear, I'm never selling my Bitcoin stack just to ape into these stocks. I'm doing it with free cash because the phrase still holds true. Not your keys, not your coins, man. A lot of people are to learn that the hard way, and I'll be damned if I will fall for this trap. But I think that these are incredibly interesting investments for this cycle, and that when we have risk on, these things are going to go much higher. When we have risk off, they're going to collapse like you've never seen before. Thanks for watching.